Hey, thanks for checking in here. Today, I'm going to show you how I use my checklist on 3 different covered call plays. Now, it's going to be one that I bought, one that I'm currently watching right now, and one that got rejected. And it's pretty simple. I mean, when you look at this thing, we're just talking about price. And so, if like I said, if you're watching, taking the time to check out my channel, I'll send you the checklist for free. It's a one-pager. It's nice and easy, but it's been working for me. It's helping me get better entries. Let's take a look. Okay, the checklist is a simple 3-step framework. Number 1, find quality stocks at reasonable prices. Secondly, wait for strength to begin building. And I'll show you what that looks like on the chart. So I generate income by selling the covered calls into strength. For example, here is the KHC chart. Kraft Heinz company. It's just an old school company. Look, it's outside of the AI bubble right now. It's away from the tech industry. That's why I took a look at this. Good earnings, just a solid company. It's been moving sideways. Good companies that move sideways are decent covered call plays, or I should say potential good covered call plays. Now, right here, I had this shorter term trend line. These are the daily candles. So I went to my checklist and I go, okay, let's see what, number 1. Is it in between the 52-week high or low? Okay, where is it at in between those two? That's the first 2 check marks. Calculate the midpoint. I want to find the midpoint of the 52-week range. Is the stock above the midpoint? Am I comfortable owning this stock if the trade goes against me? Yes, I am, because this is a huge company that's been around forever. Warren Buffett likes this company. So that is a yes. And then lastly here on step 1, is a company financially healthy and a business I would comfortable owner. Yes, they make money. You should see all the products these guys sell. In a time of a pandemic, you want to own a company like this, okay? No doubt about that. Number 2, let's look at the RSI strength. Okay, that's what the number 2 is. It's all about this RSI strength. What does that look like? Down at the bottom, here's our RSI indicators. Now, here's where I got in when this thing bought off. Okay, first of all, the 52-week high is right here. Right up here, this orange, excuse me. 52-week low is covered by my green support line. So if you look at that line and this line, we are trading below the midpoint area, which is right about here. Okay, so it's affordable. The PE ratio is good. Okay, the valuation is good. It's a cheap stock relative to how the strength of the company. So that's why I checked all that step 1 off. Okay, next, the RSI indicator down here, relative strength index. Once it bounced off this little trend line that I drew right here, and I saw some green candles, I go down here and I start looking at the RSI, and guess what? It was starting to creep up above 50, okay? And so when it got up above 50, that's where I decided to buy some shares of KHC. Now remember, you have to own 100 shares of the stock to sell one contract. I bought it at $23.33. So $2,333, I could sell one call option. And then so look what happened. That relative strength index gave it a little bit of a push right here. So I went and sold a call option right up at this little resistance here. And now this is just a safe, slow, and steady way to bring in some revenue. The premiums weren't amazing, but you know, I look for like 50 cents to $1. Okay, that's all I was looking for. And so at that time, let me just see if I have, oh yeah, here it is right here. Let's look at this options chain. I like to look 30 days out. Okay, so I was looking 30 days out, and I believe I sold the 23.50 because that was above my entry price. These numbers are a little low because the stock backed off, but I believe it was like 75 cents, which makes sense because this blue shaded area are options in the money for the July 24th, 26th. So that's 95. Yeah, so I was right around 70 cents. You know what? Big deal. I brought in $70 per 2,300. Okay, it's a little bit lower percentage than I liked it to, but again, I'm putting my money to work in volatile times when the stock market's at all-time highs. We don't want to put a lot of money in right now. Okay, one of the positions is to hold cash because we're going to see a correction in the market. That's my way of thinking. Okay, next one. Chewy. Okay, now again, this can be affected by high inflation, this company, because what happens is their revenue numbers were down in the area of not dog food and cat food and stuff like that. People have to feed their animals no matter what. They're still going to keep buying dog food, cat food, but it was the luxury items like the bougie necklaces and the, you know how people put the jewelry on their doggies, you know, the fancy scarves and the fancy leashes and harnesses, and you know, those kind of things that are blingy and extras. People do cut those out, so that side of the Chewy revenue was lower as expected, okay, in times of high inflation that we're sitting in right now. So that's why this stock is cheap. Again, back to my checklist. Number one, 52-week high is up here. 52-week low is this. It's covered up by the support level that I have right here. And I have a little note. This is my swing trade buy zone when it comes down here. So guess what? I'm looking at this right now. As we speak, I have not purchased Chewy because back here I thought that it was going to go down and touch my buy zone, and it basically did. So once I get off this video today, I'm going to pick up some Chewy because look, we've got a little bit of momentum. Number 2 on the checklist is the RSI strength. Okay, let's look at that, and I'll show you number 3 in a minute. Number 2, the RSI is pretty low down here at 36. That is bearish, but look at this. It kinked up. So if I open this up, you can see down here at the bottom, see how this thing kinked up and is going above the RSI average, which is the yellow. So right now it's about 35. So if this keeps going by the end of the close today and it gets closer to my $50, which is neutral, above 50. We want it to go above 50 to create a little strength when we purchase. But if it's kinked straight up like that and it's a little bit below 50, I will probably do a safe buy at a low valuation towards the 52-week low. Good PE ratio. Valuation is good. I mean, look how it's been coming down. This is just from way back. These are my lines here. Cheaper. Sometimes it has to stabilize because it's a good company. They're still making money. They actually did beat revenue expectations, I believe, on this last one by like a 0.1, a surprise revenue of you know what I mean, 0.18%. That's something. Okay, but this is why it's been the standardized earnings have gone down for the reasons why I just talked about. Okay, so not a bad thing. I like the valuation of this stock. It's cheap right now. We like to buy things cheap and sell them, buy low, sell high. Now, to finish up this one, if I purchase down here, I think I'm going to wait for it to cross this downward trend line. If it kisses it and touches it up here, I am going to sell a call option on strength. You buy on weakness. It looks like it hit the bottom at weakness. Make the purchase and you sell one of the little bump up. Don't wait till you don't have hopium and go up here and wait for it. It might not ever get up to this next resistance level up here at 30. Okay, so slow and steady. That's what we're talking about today. And then last one, AIP. Okay, this one is easy. And then before I go in that, okay, number 3 on the cover called setup. Buy the stock if it sets up. Setup remains favorable, like I just showed you. Okay, look to sell the call into strength, like I just showed you. Identify the next level of resistance, which is my trend line that I'm calling resistance on that one. Okay, 30 days to expiration is what I look at. We got to review the premiums on it. What will the annualized? I try to get at least 4% on these trades, but right now in this market, it's been like 3.5 to 3%. It's okay. It's money coming in rather than sitting there doing nothing. Be comfortable selling the shares at the strike price. Yeah, so I'm just going to get a strike price just above it. the tracker. I haven't showed you guys this tracker. I created this record the trade in the tracker. It's an unbelievable spreadsheet with a bunch of tabs that show how to it calculates all the percentages for you. Okay, I don't have that up here yet because I want to add this checklist. I said I was going to do it like a week ago or so, but I haven't done it. I apologize. I'm going to get that out to you. Okay, that's when I hang up. That's one of my on my list today for to-dos. AIP is in. It's actually a semiconductor stock, and so when I was looking at this, number one rule on the tracking sheet, what's it say? It says 52-week range filter. So we're going to look at the 52-week range. Here's the 52-week high up here, 52-week low at the bottom. Hey, thumbs up, everybody. Give me that thumbs up if you would, please. It's too expensive. It just bounced off the 52-week high. And look how scary that is. If you would have bought up here because it's hitting the 52-week high, but boom, it dropped off. It dropped off. Oh my God, dude, that's like that's an automatic plus 10% when it hits that high. That is an indication that we're starting to see the rollover on the bubble. And then if we were dumb enough to want to buy this thing because of the hype, the AI hype, look at the RSI. It rolled over. RSI rolled over, overbought up here, but again, it hit, rolled over, and it's shooting straight down. It's at a 61. It's going towards that 50. So there's my checklist, everybody. This is a do not buy. It's too expensive. Do not buy. That's number one on my checklist for these cover calls. Okay, that's the main thing. So like I was saying, everybody, it's not tricky. This is a very easy thing to follow. If you just stay disciplined and don't buy things on hype, you just buy them on valuation. Buy things that are cheap in a good company that has solid revenue coming in. You're going to be safe. I'm telling you, it's kind of boring because it's slow and you're not making these huge gains. But would you rather make some gains or let your money just be sitting on the sideline stagnant, right? The biggest benefit of a checklist isn't finding more trades. It's just avoiding the bad trades. I'm telling you, that's going to save you in the long run. When you avoid bad trades, you're going to love the way your portfolio looks. You're going to have a lot less red numbers over in that column, the total column, than you would otherwise. Look, again, if you wanted this free list, it's only one page. It's kind of short. Click that link below. I use this before every cover call trade that I use, so grab it right now. That way you can look at it. I wanted to throw something out there for free, everybody. Click the link and I'll email it over to you. Like always, give me that thumbs up if you would. Please share this video. Like and subscribe. All the above, and the bell. Some people forget. Click that little bell under the subscribe. It's right near the like and subscribe right there. You have to hit the little click down arrow, and then you can click the bell. So when I shoot videos out like this, you get the notification right away that you can look at it. Thanks for your time. Enjoy the rest of your week, everybody. Hang tight. We're in a crazy, volatile market right now. It's one day at a time. All right. Stay safe. All right. Peace out.